page 165. Explain the steps in the accounting cycle and how to prepare correcting entries. So illustration 4-11 are all of the steps that we take in the accounting cycle. So number 1, we analyze transactions. 2, we journalize them. 3, we post them to our ledgers. 4, we prepare a trial balance. 5, we journalize post adjusting entries or the worksheet. 6, we prepare the adjusted trial balance. 7, we prepare our financial statements. 8, we journalize and post our closing entries. 9, we prepare a post-closing trial balance. And then we're ready to start all over and do it again. Okay, we're not going to cover reversing entries, but we are going to go through correcting entries. Why would we need to make a correcting entry?
Bad math.
Yeah. There's lots of reasons, right? We posted to the wrong account. We journalized to the wrong account. We post to the wrong account. We used the wrong amount. Do we just delete our entry and start over?
No.
No. This is the one instant where we forget that we have computers and that if we were writing it in order, we can't just white out a journal entry. Doesn't work, right? We have to leave it, we have to let it be, and then we have to come back later and fix it, record a correcting entry. So yes, in the computer world, we could just delete it, right? But it had an effect. Things changed because of what was in that journal entry. So we can't just delete it. We have to say, oh, it's there, it was wrong, how am I going to fix it? Okay, so we have a couple of cases. On May 10th, case 1, middle of 166, Mercado journalized and posted a $50 cash collection on account from a customer as a debit to cash, credit to revenue. Well, wait a minute, what happened? Why is that wrong?
Should be on account, right? Or
yeah, it should have gone to accounts receivable because we've already recorded the revenue, right? So the entry was actually recording the revenue twice. So our revenue is now going to be overstated. Okay, so the company discovered the error on May 20th when the customer paid the remaining balance. So since we didn't record it to accounts receivable the first time, when they went to pay their balance, what did their balance show? They still owed the full amount, right? It didn't reflect their payment because that's not where the account was hit, right? They recorded additional revenue. They didn't decrease their balance. So what's our recording entry?
Debit service revenue. Credit.
Yeah, what are we doing in our correcting entry?
You have to fix the service revenue on accounts receivable.
Yeah. We're taking it out of revenue because it shouldn't have gone there. And we're reducing their receivable because they didn't owe us that additional $50. They actually already paid on their account. We got the cash. But since we recorded it incorrectly, their balance is still high. So we need to remove the revenue because it was recorded twice. And we need to reduce their receivable because they actually made that payment. They need credit for it on their account. Okay, number 2, bottom of 166. On May 18th, Mercado purchased on account equipment costing $450. It was journalized and posted as a debit to equipment of $45 and a credit to AP for $45. So what happened?
Didn't properly record the amount.
Yeah, we dropped to 0. Did we hit the right accounts?
Yes.
Yes, we just recorded the wrong amount. So how are we going to fix it?
Do the same thing to the difference.
Yeah, we're just going to record what we missed, the difference. So it should have been $450. We recorded $45. So we didn't record $405. So we're going to record the remaining $405. Top of 167, there's the fix. Debit equipment, $405. Credit AP for $405. Okay, so this will be, well, we don't even have time. We can start it. Do it number 3, bottom of 167. Maybe just do the first one.